Absolute Wealth. Real investors, real results.
Hey everybody, this is John Carter with Absolute Wealth, and boy, we got ourselves a really slow market. This is the lowest volume of the year and the tightest range of the year. As you can see here, we've been kind of closing in. Today was a 5-point range. We've been closing at the same level. There's the good news with this. You can see volume has dropped off, but the good news is that typically when you see something like this, it means there's a lot of volatility coming down the pipeline. I'm looking for a lot of volatility that's going to hit in September and October. And I am actually looking for a possibility that the stock market is going to put in a top here in the near future. Very, very slow going here on the weekly chart as well. In terms of stocks that I like here, Apple is about the only one that I do like. On the long side, you can see here that the 52-week high is $644. We had a nice pop-up today. Nice probe at one point. Apple was up $8. Did ease off a little bit back. But I wanted to show you that we got a weekly squeeze here. It's an incredibly powerful pattern. You can see the last time we got this back here, Apple had a fantastic move. Now, I'm not expecting a $300 rally, but typically these will result in $50 to $70 moves, okay, which is obviously very playable. And if we come back here and we look at the daily chart on Apple, you can see today we got as high as 638.61 before profit taking started coming in, which is to be expected once you get so close to that prior high. But if we do gap down tomorrow, and especially if we're down here near that 620 level, I am stepping in and I will be a buyer for sure. Overall, though, I mean, this market has been extremely dull, extremely quiet. If we take a look at the dollar index here, a lot of times it's the currencies that actually drive what's going on in the market. And as you look at the dollar index here, the dollar index here just is trading sideways as well. Okay, just can't get anything going off the ground. And so now the next question is well, great. What is driving this lack of volatility? And what's driving this lack of volatility is the very low reading on the VIX. Okay, and to give this proper perspective, let's do a weekly chart here. And you can see that on the VIX, I mean, when things are crazy, okay, and this is when the market was very, very volatile back in here. And then very, very volatile last year, especially in August of last year. It was the most volatile August in 75 years. You can see here, look at the volatility. Where now, you can see where the volatility is now. It's near the very lowest level. And in fact, it's at the lowest level of the last year and a half or so. Or actually, the last 2 years. In fact, let's go back here a little further. And it's actually at the lowest level since back in here, which is the end of 2007. And what that means is there's a lot of complacency in this market. A lot of people are just comfortable that stocks are going to keep going higher, and it's typically after a period of complacency is when we get the most volatility. Okay, so again, right now, look for the markets to stay in a tight range. Look for the good stocks like the Walmarts, etc., to kind of keep grinding up. But in the meantime, keep your stops tight because I'm looking for volatility to edge higher. Because guess what? Once the VIX comes down here, the only way it has to go is up. And when the VIX goes higher, that means uncertainty is increasing and volatility is going to explode. Okay, you guys have a good rest of the day, and we'll see you at the next update.